Honourable Committee, managing the fiscal policy strategy of the fifth largest economy in Africa. He's a chartered accountant, chartered management accountant, CIMA UK, chartered tax practitioner, certified in international financial reporting standards and international public sector accounting standards, with an MBA from the University of Lagos, an MSc Accounting and Finance from Robert Gordon University, Aberdeen, UK. He's an alumnus of Harvard Kennedy School of Government. Before entering mainstream public sector, Dr. Olowo worked for top local and multinational organizations across industries, including Zenith Bank PLC, British pharmaceutical giant GlaxoSmithKline, Dutch global dairy leader Friesland Campina, Chartered Institute of Management Accountants, Club of Global Development Finance Organization, and several others, with project immersion across Africa, Europe, Middle East, and USA. In the role as Honourable Commissioner for Finance, Dr. Olowo has worked with teams and stakeholders to continuously improve public finance management through process improvement, people development, and systems digital transformation in Lagos State across revenue management, expenditure management, investment management, debt management, and reporting with a focus on improved transparency and accountability. Through these efforts, Lagos State was recently upgraded to AAA by international rating agency Fitch, reflecting Lagos State's improved debt sustainability, economic resilience, and fiscal responsibility position. Dr. Rabiu Olowo is a lifelong learner. He holds a PhD in forensic accounting and auditing. His numerous research works, including the future of finance, whistleblowing culture in Africa, sustainable finance option in agri-value chain, and several others. He has been recognized as a major contribution in the field of business, accounting, and public policy. He's an adjunct professor, executive in residence of Lagos State University MBA and DBA programs. Dr. Olowo is the youngest member of the Governor Babajide Sanwo-Olu's cabinet, committed to making Lagos the best city to live, work, and do business. Thank you very much, Honourable Commissioner Dr. Rabiu Olowo. We must that profile deserves a round of applause, and I'm sure we are convinced that with such vast experience, we have a lot to learn today. Thank you very much. So, welcome, sir.
Yeah, thank you very much, Omolara. It's a pleasure to be here. I hope you can hear me.
We can hear you perfectly. Thank you very much once again, sir. So on today's session, we're going to go and we want to hear from you, and would like by starting by saying, what does he mean by saying measuring business growth and performance? What does this mean to business owners? How can they actually measure their growth?
Yeah, thank you very much, and good morning to everybody. I can see up to 45 people on the call, and I'm sure that the numbers will continue to grow as we move into the session. I was quite, excited and delighted when I got the invitation to speak on this topic. It's a very, very topical subject, and like you said, measuring business growth is a vital part of any business strategy. And it is one that is very lacking in our small and medium scale enterprises. Tracking performance can help you to understand where your business is on its journey. I would expect that every business owner or owner manager would have a plan at the beginning of the day to say, in the next 1 year, this is where I want my business to be. In the next 2 years, this is this is where I want my business to be. This is the high growth plan for our business in the next 5 to 10 years. There should be that planning in place. So as you go on, you want to understand, are you tracking? Are you meeting these objectives? This is really, really important, especially for small business. And I tell you why. It's important because small business needs to demonstrate viability. They need to demonstrate capability. They need to demonstrate growth. And the only way you can do that is to track your performance. There are so many businesses today, small businesses, micro businesses that are doing well. But the question is, how do you know if you're doing well if you are not tracking your growth, if you are not tracking your finances, if you are not tracking your financials? So it creates inhibitants, it creates constraints for people to even invest more in your business, or for you to even give that sort of a good feel to your current investors to say, oh, we've put our money where there is value. So it is really, really essential. Business growth creates the opportunity to increase revenue, employ more staff, attract more customers, and most importantly, give confidence to your current investors and your potential investors to see that, okay, this is a place to, to really, really put in our money.
Okay. Thank you very much. When you were talking, Dr. Rabiu, you mentioned that it's important for businesses to track. Some people here, there's some business owners here, and they're wondering, what do you mean by, how can they track? Are there tools they can use to track their performance? How do they go about this tracking?
Yeah, thank you very much. It is the duty of every business owner or owner managers to track the time and resources that is being put in the business, that is being invested in their business. It is crucial for them to know whether there's return, good return for investment in this time and resources that has been put in the business. There are quite a number of tools, but let's break it down into three broad areas. There are financial, tracking measures. There are marketing tracking measures, and there are other non-financial tracking measures for you to know whether your business is headed in the right direction or not. If we get some time, we'll be able to go down, to treat what are these financial, performance measurement, what are these marketing-oriented financial measures, and what are the non-financial measures. And I can tell you that they are all important. They are all important. And if we have a chance, we'll have opportunity to discuss for them.
Okay. So what would you consider, what are the key performance indicators? What would you say are the key performance indicators?
So in terms of performance indicators, revenue growth is very important. Revenue growth is important. And for me, I think for startups, for small businesses, one of the most important performance indicators is your market share. You want to know how much market share you are getting. You want to know, if you do a competitor analysis, you want to know in this particular industry, in this particular segment, what is my share of the market? What is my share of shelf? Like if you operate in a dairy industry, when you enter into a supermarket, you want to know what's your share of the shelf in any supermarket. You want to know, you want to know how much market share you are gaining. So it's an important key performance index for you to track, because that is the, when your market share grows, your revenue will grow, your business will blossom. One important KPI as well is customer satisfaction. We used to say that customer is king. Any business that does not track its customer experience, customer satisfaction, is headed for doom, because you want to make sure that your customers are not just first-time customers. You want to make sure that they are returning customers. So it is very important for you to track customer satisfaction. Also, another key and important KPI is client retention rate, and which is very much close to the customer satisfaction rate, because that's what's going to give you the feedback on whether you are retaining your customers or not. We've talked about revenue growth. Employee growth is also very important. Employees are the ones that drive your strategy. You want to know from time to time how they are improving, from a continuous and consistent, perspective. And the last one is your profit margin. Your investors want to know how much profit you're making. Even if your revenue is growing, it doesn't mean that you are making profit. So revenue growth, employee growth, market share, client retention rate, and profit margin, for me, are key performance indicators that every small business should, to watch out for. And there are quite a number of metrics for measuring this business growth and performances.
Yes, and just also to mention for a lot of people that are thinking, oh, what are these tools, and maybe thinking, oh, is this something so that they can, so for some business that they cannot afford, it can be as little as even following up on your customers, carrying out surveys. It's not something that is out of this world. I just want, because there are a lot of businesses, we have like small businesses and there are big businesses on board. But then when we talk about like businesses like consultants, HC, how would you say that such businesses, how would they track their own performance? You know, a lot of people here are not just into retail. There are people that will say, okay, but I have a consulting business. How can I even track my own performance as well as a consulting company?
Yeah, so Omolara, we should break it down into three broad categories. Like I've said, there are financial metrics, there are marketing metrics, there are employee performance metrics. I'd like to say, and be quoted that out of all these metrics, the financial metrics for me is even the least metrics. I'd like to focus on the marketing metrics.
Yeah.
You want to understand your lead conversion rate. Many businesses do their advert and promotion on social media. So you want to know how many people, how many number of potential customers come across your advert, and how many are you able to convert into sales. So that's what the lead conversion rate. If you track this performance, you want to, be able to be sure that you are appealing to potential customers. Lead conversion rate is very important. Website traffic. How many people are you attracting to your website? So as your business grows, you are able to attract more and more people to your website. So that's a key marketing metric, because all of this has a way to add up and culminate into revenue growth. And that's why I said financial metrics is the last thing we should talk about. Some of these things are the ones that really, really, really add up to your business. Lead conversion rate, website traffic, customer acquisition cost. How much money are you spending on acquiring customers every day? So you need to understand the customer acquisition cost relative to the revenue that you are bringing into the business. Customer retention rate. How many customers are you retaining? Are they just one-off customers? No business can build a sustainable business without a high customer retention rate. You want to make sure that your customers are returning customers. So these are key metrics from a marketing perspective that needs to be measured every time. When we talk about employee performance, we want to talk about employee efficiency. If I have a company, I'm the owner of company A, you are the owner of company B. If my employee efficiency metrics is lower than yours, your business will be propelled to do better than mine. So it's an important metric for us to, really, really look at quality of work, because quality of work is what adds to quality of service, especially in a consulting business that you're talking about, because you are offering service. Adherence to values, employee satisfaction. But I know that what people want to hear today is the financial metrics. But I tell you, as the owner of, I started, a business 11 years ago. So I understand, and I want to try to bring in, a practical, point of view to building businesses. It is really important to focus on these two categories of metrics I've talked about. But lastly, as an accountant, financial metrics is equally important. But the truth is that it happens after the fact. It happens after the fact. These two things we've talked about, the marketing metrics, the employee metrics, are those ones that really, really drive growth. What does financial metrics do for you? It helps you to know whether your business has indeed achieved those objectives or not. We're talking about sales revenue. You want to know whether your revenue is growing relative to what you had budgeted or what you had planned. And that's why I said everything starts with planning. As a small business, you want to understand that what is the color of success in the next 1 year. If I started my business, whether it's a consulting business or it's a trading business or whatever business, you must be able to pencil down that in the next 1 year, what do I want to achieve? What's the color of success? Oh, I've started my business today with 5 naira. In the next 1 year, if I'm able to make 2 million naira sales, that would be great. That's your target. So you need to also be able to, track the revenue or the sales performance. Is very, very important. Also, we've talked about the net profit margin. Your business has to be profitable for it to exist into the future. So the net profit margin is determined by taking your sales value, your sales revenue, removing all associated costs, both direct costs and indirect costs. Your direct costs, culminates into those direct input into the business, like cost of materials, those things that goes directly into the cost of offering that service. And your indirect costs are maybe cost of the cleaner in the office. It's not direct, but it's an essential part of the cost. Or even staff that are not in the front line. It could be your IT staff, shared services, or people that are not in the front line, service or customer offering. You put all these costs together, and at any point in time, you want to make sure that you are achieving a reasonable net profit margin. It's another discussion about what net profit margin is reasonable or not, but I know that by industry standard, at the minimum, depending on the industry, but at the minimum, you should be able to make between 18 to 20% as net profit margin. That's a good starting point for any business that want to exist into the future. But like I said, it differs from industry to industry. If you go to the pharma industry, if you go to the pharmaceutical industry, a 20% net profit margin is not good at all. We're talking about 50%, we're talking about 60%, because they deal in high value goods, and also because they've invested so much in research and development, so their net profit margin expectation seeks to be more, so that they can recover some of these intangible costs. Gross profit margin is also important. You want to make sure that your gross profit margin is decent enough to absorb your indirect costs. Your gross profit margin is achieved by taking your sale, by removing your direct cost from your sales. So whatever is left is what you will need to take care of indirect costs, office rentals, cost of running the generators, and things like that. So it is really, really important for small business owners, especially startups, to really, really understand some of these financial metrics and be able to, agree at the end of the day that they are really, really tracking with the expectation that they have set for themselves. There are different metrics, Omolara. Debt and asset ratio. You want to make sure that a good part of your asset is not financed by debt, but also but by tangible contribution into the business. There are quite a number of metrics, but those are the basic ones that I think that small businesses, especially startups, should focus on. And I just want to take a moment to give you a real life example. We have so many thriving business in Nigeria today that are not accounted for. And as the Lagos State Employment Trust Fund, I know you have visibility into some of these things when people come to ask for loans or to ask for grant. There are so many of, especially, young ladies and men that have been doing business for 5 years, maybe selling weave on, maybe doing this and that, but even the money is paid into their business, is paid into their personal account. They've never had a financial statement. You understand? They've never had a financial statement. And if an opportunity comes, LSETF is giving loans or grants to a small business in order for them to expand, in order for them to grow. But we need businesses who are able to demonstrate so number of years of growth, and they come. The truth is that have they been doing business for 5 years? The answer is yes. The truth is that have they been growing? The answer is yes. So the next question is, show me. They don't have financial statement. They have never tracked their performance, but they have that good feeling that, there's money, I'm making money, but they are not tracking this performance. So it is very, very important that small business are tracking this performance, are documenting sales, documenting expenses. Is really, really important to attract investors. Investors will not take evidence of mouth say. They want to see business growth being tracked. They want to see financial statements. They want to see that you are paying your taxes. They want to see that the business is truly healthy. So that's one thing I have found out, that small businesses in Nigeria and especially in Lagos, where we have a good number of them have as an improvement opportunity. Most businesses are doing well, but they are not able to evidence it.
Absolutely. I agree with you. And you've actually brought it home. This is one of the challenges we have to face with some of our business owners. A lot of them do not understand the importance of, having a business account. So by the time you start mixing your funds, you can't even track, because if you're putting the same money you're using for your food stuff at home, grocery shopping, and then you're putting the same money from your business, everything's all over the place. And then when you now come to an agency or even any financial institution, you will struggle, because you can't even show proof of your business
Absolutely.
history, or your credibility as well. And then another thing is that some of them don't even understand the turnovers. What is the turnover? What is their money, and what is not their money in their account? But this is why we have sessions like this for you to educate them. And you keep emphasizing as well on small businesses, and I'm sure that a lot of people on the call are thinking, so how do I go about this? Is it that do I go and there in the app I download, is there a particular tool I use, or who do I speak to? Where do I start this tracking from? How often do I even have to track my performance? These are all the things I believe will be going in some people's head as we speak. But is there any how we can simplify it and speak to that, Honourable Commissioner?
Absolutely, Omolara. So there are quite a number of relevant tools and software for tracking business growth and performance. But I think the number one is a commitment to say, you know what, I want to start tracking my business growth and performance, because it is really important to me, and because it is the duty of a small business. That's the only thing you're going to show to your future investors, except if you don't have the mindset that you want to grow, if you don't have the mindset that you want to be approached in the next 1 year, in the next 2 years, to say, oh, I think I like your business. Can you show me more? Can I invest in you? And that's the, goal of every small business owner, especially startups, to attract investors. So it is really important that you do that. There are quite a number of tools, inexpensive tools. From an accounting perspective, there are quite a number of software that you can use. QuickBooks, I don't want to make free adverts, but QuickBooks, they are accounting softwares that's cheap at 6,000 naira per month. For you to record your sales, your expenses, and even prepare a financial statement at the end of the day. And you don't need to be an accountant for you to do that. You don't need to be, because I understand that small businesses, the meaning of small businesses is that it's not a full-scale business, that you need an HR manager, that you need an accounting manager, an account receivable manager. No, most times it is only one person or two people that does this thing. So getting an accounting software for you to record your sales, your expenditure, for you to run simple financial statements. So I want to see my profit and loss account. I want to see my profit or loss account. I want to see my balance sheet. I want to see my cash flow analysis. You can do this with QuickBooks, Zero accounting software. There are some very smart softwares today, like Expensify, for invoicing and accounting process. So it depends on the industry you have. But going from that, I laid some emphasis on marketing metrics. I've come to understand, as a small business owner myself, I've come to understand that marketing metrics is, if you like, the most important. It's the most important. It's the most important for growth. For growth. Google Analytics. You have a software. You have a website. You've invested so much in advert and promotion. You want to know how many people are checking your advert, how many people are reading all the things you are posting, your lead conversion rate, how many of these people, 1 million views. Who cares about 1 million views? So out of 1 million views, and you have one customer or two customers, it means that your lead conversion rate is poor. So it gives you feedback on how you can convert more people, seeing your value proposition, seeing your product offering, seeing your service offering, how much you can convert some of these people into real sales, right? So you can use Google Analytics. There are a lot of business intelligence and data analysis like Sisense. There are quite a number of them. Statistical analysis system, SaaS. I think there's one called, KISS metrics to understand a customer journey. As a small business, you need to understand your target market. So focusing on marketing metrics and using some of these analytics, because we're in the world of digital, transformation. Most of the customers that you are even looking, out for, most businesses today explore the social media together because that's where everybody is anyway. So there are quite a number of relevant tools that are not expensive. We've made mention of, Expensify for your invoicing and accounting process, Xero for your accounting, software to run your financials. We've talked about QuickBooks. These are quite, popular accounting softwares. We've talked about Google Analytics for your marketing leads, understanding your customer behavior, understanding the demography of your customers and how you are reaching them, and things like that. We've talked about business intelligence and data analysis using SciSense. SciSense is another relevant tools and software. We talked about KISS metrics, to understand your customer journey. There are quite a number of them, Omolara.
Okay, so you did mention, so it's very important, just so we emphasize again, you made it very clear that marketing metrics first, that takes precedence, and then you can say employee metrics, and then finally you're saying that financials should be at the bottom, and for various reasons you've explained. But then you also mentioned non-financial. Can you expatiate on what you mean by non-financial metrics? Like, can you tell us what that entails, please?
Yeah, so the non-financial metrics are the ones that I've summed up that has to do with employee. You want to understand your employee efficiency. Determining employee efficiency means setting realistic, measurable goals. An employee can prove their efficiency by achieving these indicators: productivity, minimizing costs, making fewer mistakes, meeting deadlines, etc. These are the things you want to track because they have a way of driving your business growth or not. Quality of work, which is closely related to employee efficiency, speaks to the standard of service being provided. You use the example of a consulting business. It just takes you one poor job for you to lose a cohort of customers because that's how the news spread. So you want to track the quality of work by your employee center. You want to understand whether you have maker checker controls. You want to understand how many number of controls exist in your business for service to be dished out to customers. These are some metrics that you need to really adherence to values, measuring how closely an employee follows the business values in a relevant metric. Being part of the performance management, organizational values are in place to create that culture and guide behavior. One of the things that you would agree with me that is really, really, really lacking today is customer service. Everyone has seen it. You go to the hospital, you go to the airport, you go everywhere. People don't even smile at you. People don't even, they are not respectful when they are, giving you service. These are really important. If I go to a service center A and I get a smile from the person giving me service, I get respect from the person giving me service, I get that feel that somebody is ready to help me. What more can I do for you, sir? After using the product, or by the time you're using the product, if you have any question, please, you can call us. We'll be happy to, And the other one is saying, Oga, take and go. Thank you very much. I need to attend to the next person. Please, Oga, please take, and things like that. So these things have a way to add or remove from your business. And that's why we're talking about, we don't just want one-off customers. We want customers to return. So it's really, really important metrics to really drive, because once those metrics, your marketing metrics are low, your non-financial metrics that will put all these employee-related stuff together are low. The truth is that what financial metrics are you going to be measuring? It's going to be a low as well. And that's why I put the financial metrics at the bottom of the pyramid.
Okay, thank you very much. So I just want to take you back for some people that are just coming, that are just joining. So we've discussed, the Honourable Commissioner has discussed the 5 key performance indicators. We've looked at revenue growth. We've looked at revenue by client. We've looked at profit margin, client retention, and customer satisfaction, right? So when at this point where, and then most importantly, also started very, very important is for every business or startup, it's important you plan in the beginning. Planning is very, I'm just emphasizing this for those that have just joined the call. So I was going to say, sir, that at this point, when you believe, because obviously your performance will also show how strong or weak your business and where you're going to. At the point, if someone, for instance, one of our business owners on this call is sitting down and thinking, okay, just from the top of my head, this my customer satisfaction or my profit margin, where it's not been strong, how would you advise them to go about it for someone that feels like at this point the performance is not where it should be, especially obviously with the season, the COVID, business growth as well? How do we obviously advise these businesses, or what can we recommend to them at the moment, and how to go about it? Or those that have not even ever started performance at all, how can they, where do they start from?
Yeah, thank you very much, Omolara. So, in the business world, the rear view is always clearer than the windshield. And that's what we're talking about here. The rear view is always clearer than the windshield. So, small business owners, do not forget that. Measurement is the first step that leads to control and eventually improvement. If you can't measure something, you can't understand it. You can't investigate it, and you can't control it. If you can't control it, you can't improve it. So really, really understanding that planning is the first thing. You need to define where you want to be in the next 1 year. You need to define where you want to be in the next 2 years. You need to define your high growth plan, where you want to be in the next 5 to 10 years. And tracking your journey using this, using some of these metrics is very, very, very important. I'd like to take you through some of the factors that are affecting business growth and performance. Then we'll talk about what we can do, and if I'm able to articulate the solution or the suggestion as part of this, I think it will be fine. The first factor affecting business growth and performance is customer loyalty. How the customers see a business will affect its growth. That's why every small business should protect their reputation. The perception of a business is crucial, as the customers will be the source of revenue anyway. So this keys into the business branding and public reputation. What do people think about your business? Are you consistent? Are you that kind of business owner whereby people go to your shop or your office and sometimes it is closed even within opening hours? Are you consistent? So if I've been to your shop or your office 2 times this week, and for one reason or the other you went to take your child from school, it's good to go to take your child from school. It's absolutely good. But you are giving the perception of an unserious business owner, because in your shop you wrote open 9 to 5, but they went there by 2 o'clock, you weren't there. Customer loyalty will drop. So you must make sure that public perception about your business is stable and is solid. The second is management and employees. The importance of the attitude of people who run the business cannot be overemphasized. How the business is managed is a defining factor for growth of that business. Like I've said, I don't know if many will agree with me, but we have an absolutely poor customer experience as a Nigerian thing. I don't know why. And that is the difference between a business that will succeed and a business that won't succeed. If you have good customer service, people have good customer experience, by the attitude of your staff, your employees, and even management, it goes a long way to providing solid customer retention and sustainable growth. The third thing among the factors that I think that inhibits or that affects the business growth and performance is adoption of technology. Studies have shown that early adopters of technology, they catch the competitive advantage. So in an increasingly digital world, businesses must be willing to adopt innovation in technology, either to make their service reach more convenient for people. So if I'm banking with two banks, one has a mobile banking and one doesn't have, I have to take a taxi to the bank. I want to say, you know what, you don't need to call. Just do whatever you want on the phone. The answer is very obvious which one you are going to bank with. You can be able to bank from the comfort of your living room, even at 12 midnight. So adoption of technology or not, the earlier small businesses are able to adapt, the more likely that they're able to key into an edge over their competitors. Access to finance. For a number of businesses, finance and how to access it seems to be a major challenging factor. And I think that's one of the key elements and value proposition of the Lagos State Employment Trust Fund. This particularly applies to small and medium-sized enterprises. Lack to or lack of finance can be a difference between the success and failure of a business venture. How do we solve this problem? Nobody is going to put money in your business if they don't know how you're doing. Nobody is going to put money in your business if you've not been able to demonstrate growth. How do you demonstrate growth? Is to track growth. Is to track growth against the plan that you have set for yourself. Is to track growth to say, okay, this is how I did in year 2020. This was my sales in year 2020. This was my sales in year 2021. I have grown 16%. So year-on-year growth analysis. Also, this year, I did 1 million, even though my plan was to do 800,000. Oh, I have exceeded my plan. This is great. Investors want to see that. LSETF want to see those kind of businesses that have those potential and even help you to expand more. I'm sure you can speak on that better than I do. Yes, economic absolutely. And the business environment. I'll be very, very frank with you. We must salute our small business owners. We must thank them for being the driver of our economy. It is increasingly difficult to do business in our economy. It is increasingly difficult to do business in today's society than ever before. So economic and the business environment are some of the factors that affect whether or not business are able to grow or perform well. The business environment also poses a number of risks to the businesses, such as financial, operational, and compliance risks. How the business is able to manage this risk determines to a large extent whether or not it's going to achieve growth sustainably. So these are some of the factors. So it is up to business owners to have a change of mind, but remember that the success to turning this around, whether you want more access to credit, whether you want more access to finance, whether you want more access to potential investors, whether you want more access to customers, is for you to plan your business. That's one. Then to track its performance. That's where it starts. So once you're able to do this, every other thing will come automatically. The marketing metrics, for example, if you're able to understand that your customer retention rate is low, the metrics is not just for you to put on the shelf. The metrics is for you to query, why is my customer retention rate low? Is it that our advertisement is not good enough? People don't understand it. People don't like it. People don't believe us. So it helps you to get those instant feedback and do things differently.
Thank you very much. Thank you very much, Honourable Commissioner. Thank you very much. You've made very, very solid points on factors that most businesses find are challenging businesses today in Lagos and even in Nigeria as a whole. Some of them I would even like to emphasize on. You mentioned, customer service and customer satisfaction, and obviously employees as well. And this is very important for business owners to understand. As much as we say that, some customer service in Nigeria is awful, I can actually testify that there's some places I've visited, and you can tell that the business owner has gone an extra mile to ensure that, the employees, they're smiling, they're always there to provide the services. And I would say and confirm that, someone like me, I tend to go back to places like this. So it also shows that, apart from business owners constantly trying to chase money, it's also important that we also focus on our customers' satisfaction. And also, you also mentioned technology. I don't think that can be overemphasized, that, we also happened during COVID. We saw that a lot of businesses suffered. But what happened to businesses, the technology business? What happened to this Zoom that we're using? Before COVID, Honourable Commissioner, did you have Zoom? How many people were using Zoom before COVID? But look at Zoom today. So the point is that it also showed to us that it's very, very important that we should find some way, to bring in IT for our businesses to be information technology efficient. And also you brought it back home when you talked about access to finance. Of course, absolutely, I agree 110% with you, because there's nobody that will give you your money if we don't see your growth. And it's also important to say that at LSETF, we are here to help them grow, because when they grow, they create more jobs. Because that's what our own mandate is. We need to create jobs for Lagos State residents. And if you're not showing growth, or we're looking at your credit history, or you've been someone that's defaulted, you're not going to get access to finance. You're not going to get our finance, that affordable finance. And no financial institution will give you that, because they are even looking out for a lot more than we are looking out for. So yes, thank you very, very much for all these points that you've made. I know I'm taking it back because you're also a lecturer. I just want you to break it down, because I know our target audience. I know that there are people here that, would need to have a better understanding. So I'll just talk about some financial statement terminologies that you've mentioned. And I'm saying this because a lot of them ask this question at the time when we're talking. When you talk about cash flow, your profit and loss, some people here are saying, okay, we've talked about how they use their bank statements, or they don't know how to differentiate between personal money and their own and their business money. I mean, the business profit. How can we advise? How do we explain to them? How do we break down profit, loss, cash flow, their working capital? These are also things that would also help them in tracking their performance. If it's quickly, because I know you know how to break this down very well to a lot of our clients that are still struggling to have better understanding of this. Thank you.
Yeah, thank you very much. I'm happy to do that, Omolara. So let's start with the profit or loss. At every point in time, a business will have to make a profit or a loss. So the profit or loss is equal to the selling price, whether it's a service or whether it's a product, the selling price minus the cost price. So at every point in time, what is your cost price? I'll give you an example, and I want every small business owner to listen. Let's say I'm selling a phone. I'm selling a phone, and I buy this phone from a distributor at 500,000 naira, and my selling price is 700,000 naira. So my net profit may not be 200,000 naira. Again, I bought this phone. The cost is 500,000, and I am selling at 700,000. The difference between the selling price and the cost price is 200,000. But the truth is that my net profit may not be 200,000. But most people think that, oh, I have made 200,000 naira profit. That may not be correct. The 200,000 is your gross margin. is your gross margin. Now, there are some costs that small business owners do not take into consideration. Omolara, and this is very insightful. The first one is business owners don't pay themselves. They don't see themselves as worthy to be paid. They don't remember to pay themselves.
Do you think it's because they don't? Is it that some of them don't feel like they've made that profit yet, or you think they profit? Because I think that a lot of people just don't feel like made enough to be able to pay themselves yet, or you have to be intentional. No matter how little, you must ensure that you get that salary.
So now the truth is that one of the things that affects small business, from a practical sense, you must be able to set the right price. So setting the right price is for you to understand all your costs. If you don't understand all your costs and putting in your cost, you'll be putting yourself at disadvantage. I understand what you are saying. It's also good to look at your competitors to see what they are charging, but it's good for you to understand and appreciate all your costs. Now, part of the cost is one, there is a transport cost for you to go and pick this thing and delivery cost. You've forgotten and you keep saying that your profit is 200,000. There are some 1 or 2 staff that you have put in the office, you are paying rent. There is a way for you to allocate a portion of that rent to that sales. There's a way. So you start by dividing your yearly rent into every month by 12. Then you allocate to each product line, because without an office, most people won't deal with you. In fact, it is an essential part of your cost. So there are a whole number. So after achieving your gross margin is 200,000. Then you will now take off all your indirect costs. Once you take off all your indirect costs from your gross margin, you get your net profit. I don't want to go into the details of EBITDA, any before tax, interest. So, but let's assume that you take, you know all your indirect costs, you take it out from your gross margin. That is where you get whether you have made a profit or a loss. Okay, so that's understood. The second thing you talked about was cash flow. Cash flow is the measure of how much cash a business brought in or spent over a total number of the period. So from time to time, business owners bring money into the business. Then and as you go, you want to also know the number, how much cash the business has spent in the business. For a retail business, it has huge cash flow. Money comes in the next week because you don't want your shelf to be for goods not to be on the shelf. You buy, so there's movement. So and it's a good indicator, especially when you have and you can break that into operating activities, into investing activities, and into financing activities as is expressed on the cash flow statement. But in simple parlance, cash flow is a measure of how much cash a business brought in and or spent over a total period of the time. And it's really important. Your business may be making profit. I want small business owners to listen as well. Your business may be making profit and it will not have cash. So you need to understand cash flow is very important. And I leave you with this balance. Cash is king. You must make sure that at every point in time, you have cash. Because if you don't have cash, there are so many number of opportunities that you will lose. When there's maybe a company, maybe the phone company, maybe it's December now, they are selling at discount, Black Friday. The phone of 500,000 is now 200,000. Why can't you just go and buy like 20 cartons and put in the store? Because you know that your retail price still remains. But if you don't have cash as a business, you won't be able to take over. You will take that over. So cash is king at any point in time. Cash is what makes you readily available to take on opportunities when they come. And so that you're able to fulfill your obligation, your rent, salary, buy fuel, buy diesel, and all of that keeps you on. Working capital. Working capital is calculated by subtracting your current liabilities, taking away your current liabilities from your current assets. Now, the question that you may ask is, what is current liabilities? Current liabilities are those obligations that are due in 1 year. So it is really, really, really important for a small business to focus on working capital. Current liabilities are those liabilities that are due in 1 year. Example, your account payable, your taxes, your wages, interest on, on loans, and things like that. While your current assets are those things like your cash, your account receivable. That's people that are owing you money, and your inventory. So current assets, conversely, are those assets that are easily convertible to cash within a year. Like cash itself, like most of your debtors, people who are owing you, don't worry, I'm going to pay you when salary comes in. They are your current asset.
Okay.
They are your current asset, and inventory as well. Most inventories are, will be converted into sales and cash, within a year period. So for your working capital is when you take out your current liabilities away from your current asset, you would have a feel of the viability of how much money you have to run your business. And like I said, you must have an healthy working capital so that you can have cash. Cash is king, so that you can take opportunity. Like I said before, it's really important, and I've seen it everywhere. Most small business, so let's talk about cost. Most small business don't know their cost. They take for granted a lot of things. So you must understand your cost base. It includes the original cost of the asset, or the original cost of the product, like the phone that we talked about, and any other cost associated with acquiring, holding, and disposing the asset. Because these things, you put it in a store, maybe in a warehouse. There is a storage cost for every unit of phone. Did you put it in? So understanding cost is really, really important for small businesses. Then let's talk, a bit about borrowing. Borrowing, means, to take money from a source. More often than not with a formal agreement. I'm sure the LSETF to give some very concessionary loans to small businesses that will be repaid back at a certain date, usually in regular installments. Are borrowing good or not? In my opinion, borrowing are very good because it helps you to achieve today what you may only be able to achieve in 1 year or 2 years. It brings the success nearer. And there is cost to borrowing. So it is very good for small businesses to understand the cost of borrowing relative to the value they will get. Because if the value you are going to get from that borrowing through sales and profit is not up to your borrowing cost, then why should you borrow? But when you know that if I borrow and the cost of borrowing is 200 naira, and if I take that money, I'm only going to pay LSETF back 200 naira, but I'm going to make 1 million naira profit. Why not? You take it. It helps you to achieve that, return the borrowing cost, and retain the profit. So it's really, really important for small businesses
and
to really understand that. And
you forgot interest too. You said interest before people.
Yes,
don't think
yes,
LSETF is interest free.
Yes.
You said take 200 and pay back 200. Yes. And pay back the little interest. So it's correct to say that all of this gross profit, your inflow, your outflow, this is how you can measure the success and advancement towards your own goal as a business owner, right?
Yes.
Okay.
Yes, please.
Okay. So I just wanted to make sure so we understand why it was very important for you to explain all of that. So, we're coming to almost an end before we start asking questions. I'm sure a lot of people have a lot of questions for you. But I would just like to ask you that, like, when we look at the competitor analysis and the importance of any business owner, even in tracking all this matrix, how important is it for them to also understand the current market situation, the current business market, what is going on in the market, how that would also impact your own business. So, for instance, if you're in a particular delivery of, furniture or cement, sales for cement, what is going on in that market? How important is it for your performance and growth? So basically like a competitor's analysis.
Yeah. So, Omolara, that's an excellent question. Like I said, in business, in the business world, the rear view is even more important than the windshield. You need to be looking at your side every time. So the competitor analysis is very, very important. You need to know what your competitors are doing. It is a process of identifying competitors in your industry and researching their different marketing strategies. You want to know what they are doing by legal means. You want to know what they are doing. Sometimes people even try to buy goods and offerings of their competitors. They want to know, especially the leaders in their market. They want to know what they are doing. Sometimes you just take and go and buy it. There's nothing wrong in you buying sample products from your competitor. What is it? Why are people going here? I want to know. So you can use this information as a vantage point, as a point of comparison to identify your company's strengths, weakness, or improvement opportunity. So even small businesses on their own can do SWOT analysis. What's your strength? What's your weakness? What are the opportunities? What are the threats that you have? So this competitor analysis will help you to use tools such as the SWOT analysis to understand what are your own strengths. Are you the market leader? What are the things that are inhibiting your growth? What are your weaknesses? What are the opportunities that you are yet to tap? What are the threats from a social, point of view? So I think you couldn't have said it more eloquently. Competitor analysis is very, very important, and that's why one of the things I said earlier when we started as an important metrics is market share. So it's not just about profitability. You might be making profit, but how much share of the market are you controlling? If you go to the telecoms industry today, MTN, Airtel, Glo, they all know the number of market share they are controlling, and they are all fighting for market share every day because they are looking at the rear view, they are looking at the rear mirror. What's happening? How many people are going to my competitor? Why are they going? Is my competitor giving deals? I'm also going to give deals. Buy 5,000 naira, get 5,000 naira for free. They are doing this not because they truly love us. They are doing this because it is feedback they get from competitor analysis. It is really, really important to look at the red mirror.
It's very important for any business owners. It's very, very important. And I know some people say, should you spend most of your time trying to see what is going on with your other competitors? Yes, it's important. You need to know that. That way it would help you know how you can also improve your own business, what you can do better. What is that person do better? Like you said, you just gave good examples of telecommunications that are already making millions and millions and if possible billions, but they are still constantly chasing and looking at what each of them are still doing and how they can improve and how they can also be ahead. So it's competitor analysis should never ever be overlooked. Before we go into questions, Mr. Honourable Commissioner, I would like you to say very quickly, in summary, something short, in summary, your advice to business owners in Lagos State.
Yeah, so thank you very much. It's a pleasure to be here.
Performance.
Yeah, it's a pleasure to be here. Like I said, we salute small business owners. We salute you. We salute you. The SME sector is the backbone of the economies of, major developed economies that we know. It is important contributors to employment, economic and export growth. So we understand your value and we understand some of the constraints that you are having. But it is really, really important for you to understand business growth and performance and how to track it, because in that way it opens up doors, access to capital, access to finance, customers, and even giving you feedback about your market share. Starting and growing a business is as much about the innovation, the drive, and the determination of the people who do it, as well as the product that they sell. So a business must at all times plan for its growth and development. Strategic plans must be put in place detailing what the business wants to achieve and what timelines, either short-term and long-term. That's where it starts. There should be targets, and it should be useful for measuring success at the end of the day. Every organization which wants to succeed must invest in its people. Employees must be well trained to represent a business in good light to customers. Some of us are small business owners, maybe because we have to attend to other things. The person you put at the counter is your business. If the person do not reflect the values of that business, that is how customers and outsiders are going to portray your business. So the person is the face of your business. They must be well trained. There must also be a process to make sure that the employees not just learn new things on how to serve customers better, but also how to learn from their past mistakes. So there must be, sessions whereby you talk about reviews of last month, last quarter. And lastly, Omolara, the role of technology in business growth and improved performance cannot be overemphasized. Businesses should take advantage of technological tools in their operation, including how to track their own performance. Thank you.
Thank you very much. Thank you so much, Honourable Commissioner. Thank you for taking time out to be here today and to also share your experience, your business experience, and also talk to us today on measuring growth and performance. Even I in person have actually learned a lot already from this 1 hour session. We're going to open it for questions and answers now. So questions, please. Let me just open. I'm just looking. The first question says, hello, if I keep my records as in financial books, can I use those to measure? For example, I have monthly income sales data and financial reports simultaneously. What template can I use to gauge my performance? Honourable Commissioner, did you get that question, sir?
Yes, I got it. And so I think...
yeah, actually in the Q&A. So if you don't, we can open it up, sir. Okay, yes, sir.
Yeah, so I think the person asking that question has already started to do the right thing. You have financials. Financials are a good starting point, but you must be able to get the insight out of the financials. So the financials are just like every other document. So you need to get insight. So what do I mean by insight? Now you have your financials for last year. You have your financials for this year. Get the figures out. What was my sales last year? What's my sales this year? What's the percentage growth? So that is how you measure your performance. What is my gross margin last year? What's my gross margin this year? How have I grown? What is the state of my cash flow last year? What's the state of my cash flow this year? You see that there will be a lot of ups and downs. So for the ups, you need to also understand what you are doing well. So it's not just for something to look green and good. It's not good enough.
Honourable Commissioner, are you there, sir? I think we're 1 minute. I think, let me call him. I think we're having a bit of technical issue here. I apologize. It seems like we've lost the Honourable Commissioner due to technical or network issues. It will be back shortly. Just give us a few minutes. Honourable Commissioner, are you back on, sir?
Hello?
Hello, sir. We lost you for a minute.
Yeah,
Honourable
sorry, I don't know
Commissioner.
what happened. Yeah. Can you hear
No
me
problem,
now?
sir. We can hear you perfectly. Thank you very much. So we're
Yeah.
just on our Q&A.
Yeah, I don't know at what point you lost me. So I was trying to answer
The first question on how to measure
yes.
the financial books.
Yeah, so I said that's the first play, that's a good starting point that you have, a financial statement, but you must also go deeper to understanding the insight that the financial tells you. So it's not just about having, profit and loss for this year. Oh, I'm making profit. It's not enough. But are you doing compared to last year? Are you doing compared to your plan, to your budget? We said it start with planning. So how much profit did you say that you are going to achieve? How much did you achieve? What's the percentage growth? What's the difference? Then, we spend a lot of time on competitor analysis. You also need to understand how much sales your competitors are recording, as as it differs from yourself. So you also want to know how you are doing compared to competition. So you need to get those insight out. And the last thing I'm going to, tell the to speak on this question is you may not be able to get your marketing metrics from the face of your financials. These are things that you need to really, really drive from your operations, your customer retention, your share of market, and all of that. These are metrics that are not on the face of the financials most of the time, but they are really, really important to drive the financial, and you should take them as equally important.
Thank you. Thank you very much. Honourable Commissioner, I'm thinking your video is not on. Is it? Can you please turn on your video so they
I'm
can see
trying
you,
to
sir?
turn it on, but it's not allowing me. Maybe you can do it from your side.
Okay, I think it might be a network issue, so maybe we should leave that. Next question. I think he asked, "Have my financial result? How can LSETF help me with you? I got my performance. I really need to know." So LSETF, so from the next question was asking what LSETF can do. So for us, this is one of the things we do at LSETF. So we can, and there are several other trainings that always comes up, like we have financial literacy training, bookkeeping trainings. You can always, follow any of our social media platforms to know when these trainings are coming up. And we're always ready to continue to help and provide business support services in one way or the other. So I hope that answered this question on that, on how LSETF can help. As an entrepreneur, can I increase my conversion rate? That's another question for you, Honourable Commissioner.
That can I improve my conversion rate, or how?
Can I increase my conversion rate? Maybe to customers. So conversion rate. My next question is what is it convert? Is it customers from potential customers to customers, or in
Absolutely.
what way? That is a bit
Absolutely.
ambiguous. So, Mr. Amid Labi, do you want to clarify that question? So I'll come back to you. Is there an app that can assist in drafting sales proposal?
Yes, there are quite a number of there are several. Google, tells us a lot of things. There are even templates and formats, free formats on how to write, certain letters, how to write, because there's nothing you want to do that somebody somewhere hasn't done before. And there are enormous amount of, resources we have online, for you to see templates. Even Microsoft, in itself has a free template. That's for those of you using original Microsoft document that have even budget, how to do your budget, how to do your P&L. Even Microsoft has it. How to do your expenditure, profiling. Even formats of some, certain letters, they are absolutely available online, and some are in some, package that can be procured for very, very small money. And we have some very local company now that are also putting this together. I know of a number of HR companies that are putting together some of these things that can be used locally from a Nigerian perspective.
Okay, thank you very much. So it's all about researching. Just to add to what he said, Mr. Yekini Kolawole, as the Honourable Commissioner has said, it's also about researching. There are loads of platform and tools out there, and I'm sure even some, like you said, are free. I'm aware they're free as well. Franklin Obioko asks, how do I determine my market share?
So your market share, like we explained, is fine. As a business, we said it starts with planning. You don't go into a business without understanding the what of that market. How big is that market? Like the people in dairy will tell you today how big the dairy market is. The people in telecoms today will tell you that the telecoms market is 160 million people, is 200 million people. Almost, all these people will require one or two lines. That's the market. So your own chance is how much of this market do you want to, take? So that's how you determine. So there are marketing inside companies that do this research, that do this survey. So you need to invest in research. Sometimes you go to market, you tell people, what brand they take, why they take it. Like if you're in the milk industry and you are selling skimmed milk, or you are selling low-fat milk, you want to know how much people use skimmed milk, how much people use milk without fat. So you need to invest in research to understand how big your market is and how much you want to take out of that share. Remember that the competitors also have the same goals, and you are all fighting for the same market. So the bigger pie you're able to attract, becomes what you would translate to value. So the answer to that question is through marketing research. That's the only way for you to know your share of shelf, for you to know your share of market, for you to know how much you are doing compared to your competitors.
Thank you. Fantastic. Thank you very much, HC. The next question is how to manage expenses as a small business. This is very relative to the business anyways, depending on. It said, how do I manage expenses as a small business?
Yeah, as a small business, or like we say in business, if you cannot grow your revenue, or as you are growing your revenue as well, you must also try to manage your cost. So, it starts with understanding your cost. As a small business, if I'm setting out today, I don't need an HR manager. I don't need an HR officer, a finance director, a chief accounting officer, and all those things that big companies have. So you must understand where you are as a business. At what stage of the business are you in? What are the kind of costs that you can take in? So as a small business owner, instead of having all these things I've listed, like 10 people in accounts, 10 people in HR, you can have a finance and admin officer who will drive this thing, because that's the stage you are in your business. So you need to manage your cost relative to where you are as a business.
Mm-hmm.
When you grow, you now say, this finance and admin, I need to decouple it. I need to have finance manager, because you are getting big. You can pay the salaries. So it's for you to watch from time to time what you can do. So as a small business owner, it's not good for you to start with a fully detached building in Ikoyi. You can even go to all these places where where you share workspaces. That's where you start from. So these are some of the ways for you to manage expenses.
Yes, thank you very much, AC. And just so, taking us back again, Naradia, is also what the Honourable Commissioner said when we had started. He had said planning is very important. Planning. So you have to plan. You have to understand your own business, what you're trying to achieve. And that would determine the kind of expenses. You cannot, like you said, you can't be a small business and insist that you must start your first office at Ikoyi. So, you have to plan well your target audience. All of this is very important in achieving and knowing how to manage your expenses. Going on to the next question, Omotosho Luashina says, I think you meant to say customers, not consumers. Customers retainable.
Customers are retainable, absolutely, if they have a good experience. We are all customers of some sort. We know those places that we've been to procure service or product that we would like to return. And we know those places we've told ourselves that we are not going to return. So customers are retainable, and there are quite a number of things that determines whether you can retain customers. You have to have the right price. You have to have the right place. You have to write the right product and the right service. So price must be good. The place must be good. Not a place where people come and they sweat. Not good for customers. You don't have a seat for customers to sit down. So the place has to be good. The price has to be good. The product has to be good. And the service, most especially. The person giving the service, even if all these are good, but you have a very, very lousy customer service, assistant, it spoils everything. So all this has to be good. And I can tell you that is the only thing, or the single most important thing that that customers want. And I can tell you that customer service is even more important. Sometimes, even when I'm not saying that we should sell things that are not inadequate. Even when you sell things that are not inadequate, if you have excellent customer service, I tell you, your customers may not even see those inadequacies.
Fantastic. Thank you, HC. Yes, absolutely. We can't guarantee all customers, but majority, depending on all your excellence, if you keep investing in your customer service and your employees. The next question is, I'm just going to the next question. Sorry, HC, how can I put myself? So somebody has asked here and said that one challenge we have is in competitor analysis. And how do we measure our market share? Our company is Mari Solar. We do basically renewable energy. What do you advise on how to get this competitor analysis, knowing our market share?
So like I said, it is the duty of every business owner to understand his market. When I say market, you understand its industry. So you must know the players in your industry. You must know what's your position in that industry. You must know. You must know the leaders in that industry. What price are they setting? If the leader in your industry is setting a price, we are all in this country when a particular telecommunication company came in and said, you know what, I'm going to go by per second billing. Every other telecommunication company at that time had to go that way. If not, they will lose market share. So you must understand your industry. You must understand what the competitors are doing. You must understand your own position in the market. It is only when you're able to do that, and you must be able to invest in research. How much of this market are you currently serving? You must know your market share. You understand? If you're in the phone industry, I can tell you, Nokia will tell you what's their market share. Samsung will tell you what their market share is in Nigeria. iPhone will tell you what their market share is in Nigeria. They all know. Techno will tell you. Techno would say, okay, just hypothetically, okay, we're having 27% market share. But what about this company that is having almost 40? We want to move our market share to 30. We want to make sure, and they keep improving, better cameras, this and that. They want to get more market share at the right price. So it depends. So you must have an understanding of your market. You must have an understanding of the players in that market. You must have an understanding of your position in that market and what you need to do differently in order to gain more market share. But you have to invest in research.
Thank you very much, Mr. HC. Good day. The next question from TechnoSpark says, good day, my honorable namesake. Please, what happened when you're selling? When you're selling, you use the money. Okay. What happened when you're selling? You use the money cash to buy and turn over. So what he's trying to ask is that what happened when you're selling and you use the money, your profit to buy and turnover? I think that's what he's trying to say. So maybe saying that, when you can't differentiate your funds and all the money that is coming into your account, you're using it to also buy stock again. I think so. I think that's what he's trying to ask. So just having to understand your turnover from what I'm reading. I think that's what he's trying to understand.
Okay, I don't understand the question, but what I'm going to say is that we need to separate our business from our personal funds and all of that. That is where tracking business growth starts. You can't, because you don't want to create that confusion. And at the end of the day, like I said, I know a number of people who, as part of the argument they made, I started business 7 years ago, but they're not able to bring their financial statement. What they have is their personal, bank statement, which most times, most lenders, most people who give grants do not want to take because you need to have it. So separate your business from your personal, funds. It helps you to understand how your business is doing, and so that you can track. And that's where tracking really, really starts. That's what I'm going to say to that person.
Thank you, HC. The next question is saying, basically wants to understand if your profits goes to the bank. So
if your profit goes to the bank.
Yeah, if your profits going to the bank.
Everything goes to the bank. So you might decide
all your money should be
So there are two ways. Most, because your company, your business is on the way to growth. So when you are in that growth trajectory, you will need to reinvest your profit. You need to reinvest your profit in order to make more profit. You need to reinvest, a great part of your profit to get more profit. So don't be that small. I have made 800. I'm going to go to Dubai next week and enjoy myself. No. So all you need to do is retain, the profit, because you are still growing. It gets to that stage when you're a big business, you've made profit. Yeah, you take a good part, enjoy yourself. But at this time, you need to reinvest, a good part of your profit in order to make even much more, bigger profit.
Thank you, HC. The next one is that entrepreneur planning and tracking every key to my business growth. But how can my business thrive in economy without funding or credit?
So, Omolara, you are in a better place to answer that question than me. So what I'm going to say is that financiers, we know that access to credit, access to finance is a big problem in our country. But in Lagos, it's a different story. That's why we have the Lagos State Employment Trust Fund that is they are actively looking for businesses who have the potential. They are actively looking for businesses who need help so that they can give grants, they can give concessionary loans too. But you must be able to demonstrate that you are that business. So, and the only way you can demonstrate that you are that business that they need to support is for you to show that you have a sustainable business that you're running. I've been running business for 5 years. This is my performance. This is how I'm tracking my performance. I have been making year-on-year growth of 15% in the last 5 years. They want to see that. Once they see that you are that kind of business, they will support you. And that's access to credit. And that's how your business can go. But Omolara, you can give much more insight.
Yes, sir. Thank you. So, Mr. Taiwo, thank you for your question. You were saying there are several financial institutions, but in our case, we've gone further, and that's what led to the establishment of a Lagos State Employment Trust Fund to provide access to finance for businesses like yours in Lagos State. So these are affordable businesses that are available to all small, medium businesses or micro enterprise, startup, or even micro enterprise businesses in Lagos State. However, like the Honourable Commissioner has been saying, it's important that you know your credit history. I don't know if you are familiar with the 5 C's. There are a lot of things that go into accessing finance. There are a lot of things that the financial institution or the government, like in our case, LSETF, will consider in giving you this finance. So we're going to look at obviously your credit history. You're going to have to bring a guarantor. If you're a business if you're a small medium enterprise, you have to be registered at the CAC. You have to provide your 6-month bank statement. Your monthly turnover must be at least 500,000 naira. We would look at all of this because we need to ensure that you can indeed pay back this loan. So I would advise and suggest that you go to our website and apply for this loan, and hopefully I wish you the best. And also consider the fact that it depends on the categories you fall into, whether you're MSME, whether you're ME, SME. Hello, Honourable Commissioner.
Sorry, I didn't get the last point. I'm here.
No. So sorry, I was just explaining to Mr. Femi to please go back to our website to go and apply. We have various loans that cuts across various categories. So depending on whether it's ME or MES or SMEs, it can actually apply for our loans. That's why I left it. Then the questions, because it's disconnected, I can't see the questions anymore. Oh wow. Okay, as an entrepreneur. So that's the last question. All the questions have disappeared. I think we might have to, at this point, I think we might have to wrap up. So that's the last question I'm seeing on my side on this platform. Any other questions from the audience? Please type it in before we wrap up. Okay, so at this point, I would like to thank the Honourable Commissioner for taking time out of your very, very, very busy schedule to be here with us today to obviously educate our Lagos State residents and on measuring growth and performance. Thank you so much. It's been an insightful session. Thank you very much. We appreciate your time.
Thank you very much, Omolara, and good afternoon, everyone. It's a pleasure to be here, and I'm happy we're able to engage in this discourse. As a board of trustee member of the LSETF, we'll continue to do everything we can to support small businesses, to provide capacity, to enlarge their access to credit and finance, and to be a part of this kind of development in terms of sharing ideas, learnings and information. So thank you very much, Omolara. It's a pleasure to be here.
Thank you very much. Thank you again. Thank you everyone for joining the session. Please join or follow any of our social media pages to have know exactly what's going on across our several programs. And for those that will be interested in access to finance, please go on our website loans.lsctf.ng and apply.lsctf.ng. Also, please follow our Instagram handle so you know more about all the future master classes, HR clinic, legal clinics that will be holding in the future, and just any general capacity development training will be holding. Thank you very much. Thank you again. Thank you very, very much, AC. We truly appreciate your time today. Thank you for joining us today. It was a very insightful session. Thank you. Bye-bye, sir. Bye-bye. You taking the